The story of 2007 in the industrial market. Biggest year in the construction of industrial real estate in the past 10 years. 39 industrial projects put 7.1 million square feet of product into the market. That's the equivalent of 17 Indianapolis convention centers. The amount of construction makes history, yes, but the type of space and location also interest us. Let's start with type. Modern bulk remains the leader. Recall that modern bulk describes newer industrial properties of 100,000 square feet or greater with modern amenities and higher ceiling heights. Of the buildings constructed and those under construction, some were build-to-suit and some were speculative. In 2007, 3 projects of note. 1, Prime Distribution's recently announced lease of 1.2 million square feet at the new All Points Midwest, our largest square footage lease in 2007. Quaker Oats, 1.1 million square foot facility in Ameriplex. 3, a new spec building of 950,000 square feet is on the market in Plainfield, the largest spec building ever in our marketplace. That's right, 3 million square feet in 3 buildings. In 2007, more mid-sized industrial buildings were constructed than in recent past at nearly 1 million square feet. Typically for users in the 20 to 100,000 square foot range, buildings like these include the Helmer Labs facility developed by First Industrial in Noblesville. In addition, about 500,000 square feet of office showroom facilities were built for users typically in the 2,500 to 20,000 square foot range, such as the Fisher's Ridge condo project near Exit 5 off of I-69. Now let's look at location. We continue to see new construction spreading out from the 465 loop. This takes us to another major story of 2007, emerging industrial parks. In the Northwest, we see the 65 corridor parks, such as Veris Partners' nearly 200-acre development, and All Points at Anson, a 616-acre industrial development joint venture by Browning Investments and Duke Realty, which got a big boost with Medco's recently announced distribution facility in late December. Panattoni, Opus, and other developers plan to add to this new 2.5 million square feet in the Northwest. Heading over to the Northeast, the Noblesville corporate campus, accompanied by new retail and office. Developers such as Mann Properties, Veris, and First Industrial have constructed multiple mid-sized facilities, bringing another 500,000 square feet to the office flex and mid-sized product to the Northeast. Looking east, Mount Comfort, we find University Loft's new 508,000 square foot headquarters, Precedent's 295,000 square foot spec building, a 500,000 square foot spec building sold to KTR, and multiple build-to-suits for the recently announced Flowdraulics. New projects like these have grown the East Market to nearly 3 million square feet, conveniently located off of I-70 in Mount Comfort Road. This market is also seeing attention from 4 significant developers with more than 500 acres under control for future industrial products. Heading south, projects by Panattoni, Precedent, and Quadrangle added 750,000 square feet to the inventory. Nestle Waters leased one of the facilities during its construction. The Southwest Quadrant, the big gorilla, continues to lead in the size and diversity of buildings constructed. Plainfield alone accounted for over 40% of the new construction during 2007. With land in Plainfield almost completely built out, emerging parks are moving further west, staying along the I-70 corridor. For example, Paul Kite Company's new 70 West Commerce Park, a 1,000-acre development. Adjacent to Loss 500-acre development, West Point. Both are located at the I-70 39 interchange just west of our Indianapolis International Airport. The growth of these emerging parks will continue into 2008 and probably beyond. So what about Marion County? Occupancy levels remain extremely healthy in Marion County at 95%. As new space comes online, we're filling it. Overall, not at the same pace as 2006. However, the occupancy rate for the entire market is at a very healthy 92%. Expanding construction and leasing generates some good news, bad news regarding rents and land values depending on which side of the deal you're on, and more importantly, the supply versus demand factor. I'm going to look at rents from the owner's point of view. Other than modern bulk, rents have risen slightly in most areas due to good occupancy levels, higher land and construction costs. We have new space, good location, high occupancies, so this increase is not surprising. Modern bulk rates remain flat in 2007. It will be interesting to see how the amount of new construction will affect rents going into 2008. Despite a larger than usual supply of modern bulk product on the market, these two charts show you why Indy keeps plugging forward, attracting, expanding, and retaining business. Although not a net number, over 12 million square feet of modern bulk projects were completed in 2007. As an example, SMC Corporation of America acquired nearly 100 acres located in the Noblesville corporate campus for construction of a new 825,000 square foot North American headquarters. Now let's hear from Mike Jones and Chad Bosler from SMC as to why they selected Central Indiana.
SMC is the world's largest manufacturer of pneumatic automation controls. We're virtually in every sector of the industry. We have over 5,000 core products that can be made in over 600,000 different variations.
We chose the Noblesville area after looking very heavily at Louisville, Kentucky also, primarily because of the aggressiveness of both the state of Indiana and the city of Noblesville, the transportation system that was available, in addition to being very convenient for our present workforce and local support for a future workforce to support our growing needs for at least the next 20 years.
Another key choice in the Noblesville decision was the skilled workforce surrounding the Noblesville area. With the creation of 275 jobs, we're going to be looking for a skilled workforce that exists in that surrounding area.
On the subject of transportation, the Indianapolis market offers a very strong support in the package industry, FedEx, UPS, etc. And that's very important to us because there's about 75% of our daily shipping travels via that mode.
Okay, let's look ahead to 2008. We predict the number of build-to-suits to be up. Right now, we're tracking over 3.5 million square feet of potential activity. Industrial construction will continue to spread from the central city into emerging parks. The speculative building of industrial space will slow in 2008, particularly in the modern bulk area attributed to the build-to-suit trend. Other than modern bulk, rents in all product types should see increases due to demand. In addition, developers will try and offset increased operating expenses. Look for modern bulk rents into 2008 to decrease slightly. Landlords will look to renew existing leases early, particularly in modern bulk, meaning 2 to 3 years prior to their expirations. Quality freestanding facilities will remain in very high demand as increased construction costs prompt buyers to look for less expensive alternatives. As a final comment, with occupancy high in an overall very healthy market, industrial real estate in central Indiana remains a very solid investment. I look forward to speaking with you again in 2009.